you see traders and investors tend to fall into the same repeating kind of scenarios of getting excited over something, getting invested in it, believing in it, believing that it'll just go up forever. And it just shows you that, I mean, anyone out there who did get hurt in whether it's Bitcoin or BSV or anything else, you're not alone, and there's a lot smarter people falling into these same traps. So, I mean, it's important to learn from our mistakes, but it's also important to give yourself a break sometimes and say, hey, listen, let me learn and then do better next time. I used to live in Oregon a little over a year ago, and basically right when Doge was making this crazy move and you had Elon Musk talking it up, my UPS driver delivered some packages, and he knew that I was an investor, and he's like, oh, I bought some Doge, and I'm like, you may want to just, take some profits here, but it's going to be the best. And it was right in this period. And what you say, that blue collar worker, and it's nothing against, anyone can be an investor, but what you tend to find is that investing does take time, energy, and dedication. And when people hear about it through the grapevine from their buddies or their colleagues, and they're buying it at that point in the cycle, the smart money has already got in. And then the smart money is just loving this, that they can just sell into these people that are buying in. So you have to be very aware of where you're getting your information.
Let's talk a little bit about scaling in, or some people call it laddering in. Like this is a strategy that I pick. Like I think that we're somewhere in the trough near the bottom of the market.
Yeah.
I don't think we're at the bottom. I do think we got another big negative splurge to like there's a big red candle coming at some point, but just like any commodities market, like if I'm trying to think like BlackRock about this thing, it's like, okay, maybe I want to invest $50,000 into Bitcoin, but I'm going to do it over 18 to 24 months because I'm not a sniper, but maybe I'm okay with a shotgun, right?
Yeah.
And so do you have a similar strategy? I imagine you do, given that you're a swing trader.
Yeah. So just like that, I learned the hard way early on, and I found out that the first step in any good investor's, business plan, swing trading investing, is to number one, face the fact that you're not going to always pick the bottom, right? Especially when you're bottom fishing, as they call. So I do exactly use the term. I call it the shotgun effect, which is like, instead of picking one specific entry to throw all your money at, just spread it out in a general range. And so what I did is with Bitcoin, I still think it's got downside after this latest bounce. I still think we actually have one more little push up, but I think it's going to 12, 13,000, maybe even lower. But when it got to 19,000, I said, you know what? I'm going to divide the amount of money that I want to put at risk in Bitcoin, and I'm going to do 1/6 at 19,000. And then every 2,000 to 3,000 down, I'll just put another 1/6 in until I have a 6/6 position, right? A full position. And I agree 100% is that, if it doesn't get to 12 or 13, I don't want to be sitting there with no Bitcoin at all when it runs to 100 to a half a million. So I'm more than fine on expecting to be down on from a 19,000 entry if it goes to 12 or 13. Especially if I'm dollar cost averaging in. So I do that exactly. And I think it's important for investors to, number one of the greatest things about that technique is it takes emotion out of it, right? Because if you go all in at one level and Bitcoin goes down 3, 4, 5, 6, 7,000, your adrenaline, you're like, oh my goodness, what if it goes to zero? When I have a 1/6 position right now, I'm like, I kind of hope it goes down because I want to get more, like it just takes that emotional edge because you're not investing so much capital at one shot. And it kind of gets you excited where, like, if it goes down, awesome. Now I get to accumulate a little bit more, right? So I think that's the key is the shotgun approach is the best approach. It's just the hardest one because the investor mentality is, oh my goodness, what if I only do a 1/6 and then it goes to 1 million? I'm losing out on so much money. But the pro approach is, let me do 1/6 because I want to protect my capital in case it goes down, right? It's a totally different mindset.
It's actually a good segue. Like, do you have a place where you would go? I think especially in crypto, I think there is such a conflict of interest for good information. Like, where do you go to try to maybe get ahead of some of this stuff? Like, I mean, we both kind of agreed Elon is sort of maybe he's kind of a scammer and whatever, but if you ride that hype train, like, there was a lot of money to make, but how do you, like, How do you play something like that? Or did you play the Doge trade at all?
No. One of my policies about investing, and this goes back to the safety of it, is number one, the place I get my information is the chart, right? So if you look at Dogecoin, when it, basically this is referred to as a flag pattern, right? So you'd be a buyer here if you're going to take a shot. Once this thing is even up this much, there's no way I even chase it. And does that mean that I miss out on a lot of the run? Yep. But you know what? There's a million trades coming almost every day, and I'm more than happy to miss out versus me buying it here. And what if it goes right down, back down? So for me, I'm 100% in agreement that you don't trust really anyone. You trust something that's impartial. The only thing that's impartial that doesn't have an agenda is the chart, right? I mean, it's the purest form of truth out there. And so I really just use that. And I do pay attention. Like, I'm fully aware of what's going on Twitter. But for me, I actually use it as kind of a contrarian viewpoint. So when I'm hearing all this buzz again about GameStop or AMC or Doge or Shiba Inu, that's where I start to mentally say, wait a minute, I've learned enough. And this is, by the way, for everyone watching, I fell into the same issues early in my career, chasing, doing everything wrong. I just got burned enough where I started to say, wait a minute, every time I do this, it's the wrong thing. So let me think about doing the opposite. And then I started to notice it was working. And I'm like, wait, so when my gut is telling me, oh my goodness, I need to jump on, you actually look for a top. Oh yeah, this is working. So it's such a cool thing, but it's a lot of self-exploration.
Yeah, no, it's so funny. Like I became a little bit infamous in this last cycle for just retweeting celebrities. So every time a celebrity would add like laser eyes or announce an NFT coming out or whatever, I'd retweet them and say, there it is, top is in. And I did it like 7 or 8 times to some serious Twitter people. And it was, everybody, you go ahead and short it then. You be that guy, you short it. And it's like looking across, like if I would have shorted any of the times I tweeted him, it was the top. Yeah. And like, it's such an interesting thing to counter trade. Because, you look at that and a normal person is going to say like, oh, wow, okay, Paris Hilton's going to launch a thing on OpenSea. Like, I really should get into this NFT thing, right? And it's like, no, that was the top.
Yeah. And you had football players, you had basketball players taking payment, their salary in Bitcoin. Right. I mean, there was so much. I love to refer to the fact, that the last Super Bowl had all these crypto commercials in it here in the US. If you go back to the .com era, the one just before the collapse, before everything got wiped out, that was the Super Bowl, the .com Super Bowl. I mean, there's so many weird similarities, but it makes a lot of sense because human psychology doesn't change, right? It's greed and it's fear, greed and fear. And it doesn't matter if you're stocks, commodities, cryptocurrencies, that's the same emotion driving up and down.
How do you break that up in even chunks? Is each sixth actually a sixth of your money, or do you?
Yeah. So that's exactly what I do. And now there's two different techniques. One is the even amount where you do 1/6, 1/6, 1/6, 1/6, or you could do 1/8, 1/4, 1/2. You could do bigger buys as you get lower. For me, because again, you just never know if it's going to get to that lowest point. I've always found that doing the same amount just at a different level lower has been the best, where at least you have more exposure if it doesn't get all the way down to that last biggest buy.